Assalamu alaikum friends, welcome to the first ever lecture on my YouTube channel for AAA, that is Advanced Audit and Assurance. So this lecture and the following all the lectures you will be getting under the playlist named as AAA September 2022 to June 2023. That is the name of the playlist. My first video was on the syllabus, the changes in the syllabus of AAA, and after this is the next video, which is lecture 1, and all the lectures will be under one playlist. Okay, and this lecture will follow an order according to the syllabus that has been given to you. Okay, the syllabus you can download on from your ACCA website, the latest syllabus. Make sure that you have the latest syllabus. Okay, so I'll be following that order. And the good thing is, if you have a Kaplan textbook, the Kaplan textbook also follows the same order that is in the syllabus. Okay, so even in your textbook, even in your syllabus, you will find that this is the first topic that will be introduced to you when you are going to start your AAA study. That is International Regulatory Framework for Audit and Assurance Services. Okay, because before we go to audit, the evidence, the techniques, audit planning, audit report, opinion, all those things, yes, for sure we will be touching it. But before this, we first need to understand what is that framework that holds all those things, how you're going to give the audit services. There should be some framework, some regulatory framework for everything. So we are first going to go through this. Okay, this lecture does not have any questions, and also from your past paper, if you see, there are no questions as such from this topic. Then why are we studying this? Because just because in the past it has not been given to you, no questions has been asked from this, does not mean you will never be asked in the future. Number one. Number two, understanding this, the regulatory framework, you will understand why all rules and regulations for audit. Audit profession itself is bound by some regulations. You just cannot do audit the way you like. Okay. So the first topic is regulatory environment. Okay, there are sections. If you have seen my previous video, the syllabus of AAA, you know that it is divided in sections, section A, B, C, D, E. So section A is regulatory environment, all about rules and regulations and all. Okay, and the first topic, the title of the topic is International Regulatory Framework for Audit and Assurance Services. So let's go through this. We are going to focus on 4 areas in this lecture. Okay, and uh, mind you that you need to pay a little attention when you're studying, going through AAA, because I know for sure most of you are doing self-study for AAA, right? That means you are just watching my lecture, and for some, your sole reliance is my lectures, my videos. I know that for sure. And then you are going to practice the revision kit questions. And this topic itself could be a little dull and boring compared to technical subjects like other topics, papers like AFM or ATX, like taxation, advanced financial management. Why? Because calculations are not there. It does not mean you don't have calculations. Obviously, you will have when you have to calculate materiality and those things, but it is mostly theory. Okay, so you need to read a lot. Okay, and more than applying what you have studied, your knowledge, you need to have, you need to use a practical judgment. I mean, your personal judgment you have to use often, even in questions also. That's why this specific skill that you need for AAA separates AAA from other papers, and it makes it a little difficult also to score. Okay, so initially when you go through AAA and when you're studying AAA, everything looks easy. Okay, but when the difficulty comes in when you have to apply this in your question, when you are going through the question. Okay, so when you're studying, don't study everything too much. I mean, in one day, don't study everything together. Rather, study one lecture per day. Go through one lecture, perfect that lecture, and then go to the next. I've never given this much of advice or guidance for any other paper but AAA. Okay, and mind you that I have not taken AAA as my optional paper. Okay, I have taken AFM and ATX. But I have learned AAA. I have already done audit and have done other courses on audit, but I've just not given the AAA exam because by the time I could give AAA, I have already become an affiliate, right? And after that, COVID happened and all. Not just you are in. I'm just telling the story so that you don't stay under this assumption that I have done AAA, how much I've scored in AAA, how did I study AAA. That's the reason. Okay. The reason I am starting with AAA is there are two reasons. Number one is huge demand is there for AAA. I've seen a lot of students are struggling for AAA compared to all the other papers because AAA does not have a good teacher currently, if I'm not mistaken. Second thing is students. Okay, my students, they just love me too much. They are demanding for it. Okay, irrespective of the fact they know that I've not taken AAA, but they are relying on me. They have this trust on me that they can actually benefit from it. So I was like, okay, why not give it a try and let's see how it goes. That does not mean that you are going to fail or something. Definitely, I'm going to make sure that you pass AAA. Okay, I have studied AAA. It's just that I've not given the exam. Okay, it's just a disclaimer of opinion I'm giving, like how we give audit opinions and all. Okay, so relying on me, on my lecture, on my videos is good, but I would also say that you also do some research on your own. Okay, you can watch other videos if you want to. Okay, but if you find my lectures are really helpful, you see one point. Okay, that will help you whether my lectures are helping you or not. Just see how well you are doing your revision kit questions or past paper questions. If you're able to do it after my lecture, that means we are on the right track. Otherwise, you need to work a bit more on your from your side. Okay, but definitely we all will go through this. Okay, so let's start. We are going to focus on four areas in this lecture. Number one is need for assurance services. See, all those things in your AAA exam they will not ask, but the reason I'm giving is because I want to start from the very basic level before I actually jump to the main things. Okay, because for many of you, you must have forgot what you studied in your fundamental level. That is audit and assurance, the double A, right? I want to build that up again. I want to revise things again. Okay, slowly, like starting from basics, so that anyone first time they enter AAA, they should be a little bit familiar. It will take some time to settle down, and they should know those things. Okay, it is just a background. Okay, and then we'll build up slowly from there. So you can be at any level. You can be at a beginner level. Okay, you must have given your double a long time back. You forgot everything. No need to worry. Okay, everything is I'm working on that. Slowly I'm building up and taking you there, not at once. Okay, so need for assurance services. These things, most of it you have already covered in your double A, but we are going to revise and some advanced things also, which you have not covered in double A. Regulation of the profession. How the profession is regulated, the audit. Third, corporate governance. And the fourth is audit committees. Okay, this lecture has no questions. Okay, there's one test your understanding, I think, from your Kaplan textbook. If you are looking for the chapter, this is chapter 1 in your Kaplan textbook. And if you want to know whether I have the latest textbook or not, no, I don't have. If anyone has, please email it to me. Okay, at sabiakta0@gmail.com. I'm waiting for the soft copy actually. And also the revision kit. So this four, okay, starting with the subject. So this we are going to introduce you the regulatory environment. In regulatory environment, we are going to go through three things: public oversight, corporate governance, audit committees. The main thing. Starting with need for assurance services. Now, let me ask you this question. Why do you need assurance services? See, it, it's just not audit, okay? Audit is just part of it. Other than audit, also we have other services, assurance services. There are so many types of assurance services, okay? Get that very clear. So audit is one type of assurance services only. You are giving assurance. You are giving a guarantee, like, okay? So why do you need assurance services? This is very basic level. Okay, you might be thinking, is it AAA or is it something you're studying at F level again? but it's okay. Okay, so assurance professionals, okay, whoever are assurance professionals, what do? They provide a report, okay, that gives an independent opinion. Remember the word independent opinion as to whether the subject matter complies with the predetermined criteria. Okay, what do? They just give an opinion. Okay, their opinions are expressed in a report. Whether whatever the subject matter. For example, if you're an auditor auditing financial statements, okay, financial statement is a subject matter. Okay, you are seeing it whether it complies with the predetermined criteria. What is this predetermined criteria? Don't memorize these things, by the way, guys. Memorization will not help you at all because you don't have any multiple choice questions, unlike your F level. So, no need. And this is P level. You have to write based on the case study given to you. Okay. This is just for understanding purpose, not to memorize. Wherever you need to memorize, I'll tell you. Okay. That you memorize this section. Predetermined criteria like your standards, your auditing standards, your accounting standards. So whether your financial statements are they complying with IFRS, are they complying with your ISA? That's what auditors do, right? Then the sole reason why is because when you see when an auditor signs a financial statement, okay, it gives it more credibility. People, the stakeholders can rely on it more to take their decision rather than an unaudited financial statements. You understanding? So this gives more reliance, more credibility. You can trust that information when it is assured by a third party that everything is right in this company. They have followed all the rules and regulations. They have met all the criteria. You know, that's the reason why you need assurance services, because stakeholders are going to take decision based on the information about the company. So how can they rely on that company? If you are the one, if you as an owner of the company, you are the one who is making that financial statements and you are only saying everything is correct, how are they going to rely? Because you can automatically manipulate. It's your company. You will always show in a good light only. Positive things only you will show, right? No one wants to show them selves in the negative thing. That's why we need an independent, a person who is outside the organization, independent opinion from an independent person, independent from the company. So that if they give an assurance, okay, it's like a guarantee, not 100% guarantee, but some form of guarantee they are giving that yes, you can rely on this information is correct, but after doing their due diligence and checking and all those things. Understand? Audit is also one example of that, because there are a range of stakeholders who rely on this assurance services. They take their decision based on assurance services. They will check. If you go to the bank, they will check whether your financial statement is audited or not before giving you a loan. Okay. Now, second, regulation of the profession. So that was it. Why do you need assurance services? Okay, now we are coming to the regulation of that profession. Okay, this profession is very highly regulated, the audit profession. I know, I'm sure most of you are doing AAA. Reason is you want to be an auditor someday, right? But you have to know the regulation. Okay, so why do you need regulation? Because of the high corporate scandals that you have seen in the past, even in the current that's happening, all the business failure. And this is not some small level, small failure, small business failure. No, we are talking about large corporate scandals, large business failure, which can affect the economy. Okay, it can damage the economy up massively. That's the reason you need to regulate this profession. Okay, one example is Enron. We all know about Enron, what happened, right? I need to go in details about this. You can just Google it and check, right? What happened? So because of that, there was a loss of confidence in the global financial market. People stopped trusting auditors. Arthur Edison was the auditor of the Edison. Sorry, the Enron. What happened? he was equally responsible for the loss, for the collapse of the company. Because of that, people are started losing confidence in the auditor. If you are losing confidence in the auditor, how are you going to take a decision? Are you going to invest in that company? Are you going to sell shares in that company based on the information that is there? Because you're not sure whether the information is correct or not. To take the decision based on the information, like your financial statement, you first need to trust the auditor. So auditor itself needs to be regulated. You understanding? Confidence. When it's regulated, people are more confident about it, that the financial information is reliable. Third, because of this high corporate scandals and all, there has been an increased regulation. Earlier there were regulations, but it was not so much. Now they have increased these regulations in the auditing profession. Now, there are two main bodies that you need to be aware of. There are so many bodies, in fact, main bodies, sub bodies, but these two main bodies, be aware of it. Okay, just know it. You don't have to know details. Details will not be asked. One is IAASB, that is the International Auditing and Assurance Standard Board. This is the board that develops and promotes ISA. Okay, this ISA is the one that you are going to study. It's going to form the rest of your study. You're going to study all this ISAs in the AAA. This is the board that has developed this ISAs. Like how for accounting we have IFRS, right? Here for auditing we have ISA, International Standard of Auditing. So that the standards, okay, are improved. Assurance standards are improved, and it gives it a uniform, right? Wherever you practice audit, if you're following ISA, it has to be uniform, right? It has to be consistent. That's the reason ISAs are promoted. So that throughout the world you can give them the same audit services by complying with ISAs. Next is ethics. Second board promotes code of ethics. All auditors needs to comply with the code of ethics. One is ISAs, the other one is code of ethics. Okay, you don't have to know how the board operates, how many members are there. Details are not needed. Just know one is ISA, the other one is code of ethics. These two things auditor needs to comply with. There are so many things. If you go to your textbook, so many things were there. I have removed all those things because whatever is important from the viewpoint of your exam will have included. Okay, that's why you see my lectures will be shorter, because I've summarized it in that way. Next, third, corporate governance. This is a big portion of your lecture. This one and the next, audit committee. Okay, so UK corporate governance code. Okay, the OECD, that is the Organization for Economic Cooperation and Development, have produced 6 principles of corporate governance. Do you know what is corporate governance, by the way? If you are taking SBL, if you have taken SBL before this, you know what is corporate governance in detail. Okay, simple definition is, it is how you will be directed and controlled. Okay, how you are going to do a certain type of actions, how you are going to be directed, controlled, your actions. Okay, that means you have to take care of all your stakeholders, your shareholders, the well-being of the organization. Okay, that means you will be against bribery, you will not accept any forms of corruption, right? You will be ethical, you will be integral, then you will be honest, you will be accountable, you will be responsible for your decision. That is the meaning of corporate governance. Okay, so this 6 OECD principles are ensuring the basis of an effective corporate governance framework. Okay, that means how the organization is going to operate, it have to follow those 6 principles. It has to follow within the corporate governance framework. Second, Rights and equitable treatment of shareholders. Third, institutional investors, stock markets, and other intermediaries. Role of stakeholders in corporate governance. Disclosure and transparency. And responsibilities of the board. Okay. So this UK Corporate Governance Code has all this, it is built up on all these six OECD principles. Obviously, you don't have to know all the six OECD principles, but just know that UK Corporate Governance Code has been built up on that. Okay. And this code is split into 5 parts. This 5 part is very important for you. Okay. One is board leadership and company purpose. How the board is structured. Who is leading the board? Very important. Division of responsibilities. Composition, succession, and evaluation. How the board will be composed, who is going to take over you after you retire, how you are going to evaluate the performance of the board. Audit, risk, and internal control. And remuneration. These 5 areas you have to know. That's the reason we are going through UK Corporate Governance Code. Okay. So, this 5 will be explained in detail now. Board, leadership, and company purpose. Okay. Because before you audit, you have to know the corporate governance. You have to know the who is leading the board, what is the company purpose, how the risks are managed in a company, who is taking care of internal control of the company, uh, how the remuneration is set. All those things you have to know. Okay. So the board should describe in the annual report how, just know those things. Okay. Don't memorize. The board should describe in the annual report how opportunities and risks to the future success of the business has been considered and addressed. If there is any opportunity, if there's any risk, it has to be there in the annual report. The board have to do it. Okay. Second, board is the one who is going to assess and monitor the culture. Okay. And also whether management has taken corrective action or not when the behavior is not consistent with the company's purpose. Management has to take corrective action. Third, in addition to the formal general meetings, chair should seek regular engagement with major shareholders. Whoever's the chair, regularly you have to engage with the major shareholder. Okay. Obviously, general meetings are there, but even before that, you have to engage regularly. Board have to understand the views of the shareholder. When 20% or more of the board is cast against the board recommendation, that means board have recommended something, but 20% or more board votes are against it. The company should explain what actions it intends to take to understand the reasons behind the result. Okay, why are they against it? You have to explain the company. Now, why are we studying this corporate governance? Before I go further, let me pause here for a minute and explain you why. See, this is the ideal. This is the ideal position that you want a company to be. You understanding? They have to disclose correctly what their position is. They have to explain what are their risks, what are opportunities. They have to communicate with the shareholder. They have to make sure the board is uh, structured properly. This is the ideal situation. So any auditor will check for these things in the company. Who is leading the board? How the board is behaving? What is the culture? Because based on this, they will analyze their audit risk, their materiality level. That's why we need to know these things. Obviously, in reality, no one is going to be 100%, they are not going to achieve this state, but this is the ideal state. Best practice, you can say, for any company. That's the reason we are going through this. It's not over, the list is there. Board should understand the company's other keys, the views of the other key stakeholders. Okay, they have to engage with the workforce. Also, there should be a system in the company where workforce, if they have any issues, they can go and complain. Okay, which is known as whistleblowing. The board should take actions to manage conflict of interest. If there is any conflict of interest among two stakeholders, it is the board. We are always talking about board here, okay? Board. Basically, what are the board's responsibilities or roles? That's what we are discussing here. If directors are concerned that managers, okay, are not able to resolve anything, it should be minuted. That means it should be written in the minutes, okay? And if any non-executive director, they resign, they should write a written statement to the chair why they are resigning. Division of responsibilities. Now we are coming to the second out of the 5 parts. Division of how the responsibilities has to be divided. This is within the company. If these things are not clear, what will auditor come and do there? After these things are set, okay, then only auditor can come and audit the company. Next stage is auditors only after this, or the audit committee. Okay, just understand that chain, because this looks a little bit boring. I mean, why are we studying this? Who is handling what? What is the board is doing? But it's very important. Okay, division of responsibilities. The chair should be independent on appointment. Whoever is the chair, remember they should be independent when you are appointing them. Okay, the chair and the chief executive should not be the same individual. They have to be two separate. CEO is a different person, chairman should be a different person. But sometimes the chairman could be a CEO of the same company. Maybe you are finding a replacement of the chief executive. Until then, the chair could be the CEO for time being, short period. Exception cases are there, but generally separate them. Because if it is not separated, see, if all those things are not there, responsibilities are not divided, okay, no structure for the board, anyone can come anytime, anyone can do anyway, meetings are not held, what happens? Audit risk will increase. It's a risk for the auditor. Understood? This is the reason. Now I think picture is becoming a little clear. Before it was little blurred, because if all these things are not there, you're working against it. Same person is the chairman and the CEO. Okay, then the board is not structured. Okay, the board is not taking any responsibility. They are not communicating with the shareholder. What happens? Audit risk will increase. The audit report that they are going to give, the opinion, will be a qualified opinion. And we want unmodified, unqualified, right? At least half the board, excluding the chair, should be independent non-executive director. Okay, that means 50% of the board should be non-executive director, 50% executive director, excluding the chair. Don't include chair there. Chair is separate. One of the independent non-executive director should be appointed as a senior independent director to provide a sounding board of the chair. The NADs and the senior independent director should meet even when the chair is not there, at least annually once, so that they can appraise the chair's performance. Why are non-executive directors there? To appraise the performance, the chair's performance, the executive director's performance. Okay, and NEDs appoint and remove executive directors, and they can even check their performance against agreed performance objectives. See, NEDs have the right to appoint and remove executive directors if they feel they are not performing well. We have some more. Just a minute, guys. Okay, so we were at the first point. The responsibilities of the chair, chief executive, and the senior independent director, the board, and the committee. All of the responsibilities should be set out in writing. Okay, because these people are the top level people. Okay, they have an influence in the organization, in the bottom level people, for the lower level people. So their responsibilities need to be set out in writing and publicly available also. Everyone should know what their responsibilities are. Annual report should set out the number of meetings of the board and its committee and the attendance also of each director. Which director attended, which director did not attend should be written. New appointments to the board should be taken into account. Other demands on the director's time. Okay. For example, if you are taking a full-time executive director, they should not become, they should not take, they could be a non-executive director also in another company, but it should not be more than one company for a FTSE 100 company. Why? Because it will, if they are a non-executive director also for another company, it will consume so much of time. I mean, more than one company. Because already they are full-time executive director in one company. For another FTSE 100 company, they are a non-executive director. They could be doing both the roles. Okay, that's not an issue. But if they're taking it for more than one company, non-executive director's role, it will consume a lot of their energy and time. They will not be able to pay much attention to both the companies equally. One will suffer. That's the reason, not more than one. And this appointment should not be made without prior approval of the board. The board should approve it. If you are a full-time executive director and you want to be a non-executive director in another FTSE 100 company, you have to take the approval of the board. Appointment and the removal of the company secretary should be a matter for the whole board. This is a big thing now. Company secretary is very powerful. Okay. Because this person is next to the CEO. He's just under the CEO. He's the right-hand man of the CEO. He knows everything what the CEO does. He or she is responsible for handling meetings, whether you are complying with the tax, whether you are complying with the rules and regulations. Company secretary has the most knowledge of the company. Okay, so when you are appointing a company secretary, all the confidential information is given to the company secretary. So when you are appointing, when you are removing it, it's a big matter. That's why it should be a matter of the whole board. Division, and if you see company secretaries, they are not replaced very frequently. Okay, they stay in the company for a quite long period of time, and finding replacing it is also very difficult. Okay, next, the board should identify the independent non-executive directors in the annual report. Okay, and independence would be deemed to be affected. Know these things when independence will be affected. Okay, in these situations independence could be affected. Number one, if they have been an employee of the company or the group of for that company within the last 5 years. That means, let's assume 3 years this person has been an employee of the company. After 3 years he became a non-executive director. Okay, then his independence is affected. Why? Because he have just recently, it's not very late that he have just left the employment, right? He has been employed, he knows about the organization, so he could be biased. It's like he is checking on his own work. Okay, he's monitoring his own work after becoming non-executive director. He know what mistakes he have done being an employee. So that's why, to protect the independence of the non-executive director, they say within last 5 years, if you're an employee of the same company or the group of that company, then independence is affected of the non-executive director. Second, has or has had within the last 3 years a material business relationship with that company where you are a non-executive director. either directly or either indirectly. It should not be so. Okay. Third, you have received a remuneration other than your fee. That means you are participating in the share option, your remuneration is performance related, and you are a member of the pension scheme, then it will affect your independence because you will have a self interest then, right? You obviously want, uh, you know, the company to perform, or you will manipulate the performance of the company so that you get the performance related pay scheme, so that you get the bonuses, which should not be the case because you are there to monitor the performance of executive director and you are a non-executive director. So these things should not be given. You should not have access to this pension scheme. The share option, performance related pay scheme is for the executive director, not for the non-executive director, because it affects the independence of the non-executive director. Fourth, if you're having any close family ties with the company's advisors or directors or senior employees, if you're holding a cross dictatorship or have a significant links with other directors, you represent a significant shareholder and you have served on the board for more than 9 years from the date of their first appointment. So in under these conditions, seven conditions, if it exists, your independence is being hampered. Make sure you don't fall in this nine category, this seven categories. You avoid the situations, okay? Then we are moving on to composition, succession, and evaluation. How the board should be composed, who should succeed, when they should be succeeded, and how you value the performance. So a nomination committee should be established to appoint the board members. Nomination committee is a committee who takes care of hiring people, right? They are the one who hires. So they should be established to appoint board members. They are the one who are going to take on the board members, decide who is going to be in the board. Majority of the committee members should be independent non-executive director. Okay. The chair should not be the member of these committees. When the committee is dealing with the appointment of their successor, that means who is going to take over the chair, who will be the next chair. Okay, in this situation, they should not be the member of the committee. All directors should be subject to annual re-election. The chair should remain in the post. The chair should not remain in the post for more than 9 years from the date of their first appointment. That means they could be the chairman only for 9 years. After that, they cannot be. But exceptions are there. This period can be extended for limited time, the 9 years time, before you get someone else. When you want to take, like when you have to appoint the chair, the chairman, or the non-executive director, make sure you openly advertise. And also, you are giving this job to some external search consultancy. They search. Okay. That also you can use for the appointment of non-executive director and the chairman. They should not be done privately. Nor it should be done on favorism. You're favoring, you're taking on a family member. It should not be that like that through links or anything. No. It should be openly advertised. Okay. There should be formal and rigorous annual evaluation of the performance. Okay. Of the board, its committee, the chair, and the individual directors. The the chair should consider having a regular external board evaluation. That means externally this board has to be evaluated. The chairman, at least every 3 years for FTSE 350 companies. Okay, and who has evaluated their performance? Must be an external evaluator. They also should be identified in the annual report. Who is that external evaluator who has evaluated the performance of the chair? His name should be there in the annual report. Annual report should describe the work of nomination committee, how they have what process they have used to make appointments, how the board evaluation has been conducted, what are their policies on diversity, are they taking all age category or some gender over the other, or limited, how they are doing it. So that has to be then the annual report. Then we are moving on to audit, risk, and internal control. Okay, so when the board is establishing an audit committee, audit committees are made up of all independent non-executive directors. There are no executive director in this committee. Remember this. Audit committee, all are independent non-executive director. Okay, there should be at least three. Minimum there should be three. Three members has to be there. Three people have to be there to make up that committee. Otherwise, committee will not start. With one person, no. 2% for smaller companies. Otherwise, three. Three is the minimum. Okay. Max, there are no limit. The chairman of the board should not be the member of the audit committee. Third, at least one member out of those three, at least one of them should have financial experience. You understand it? Because audit committee means you have to audit financial statements also. So for that, you need to have financial experience also. At least one should be the financial experience should be there, especially when you're auditing financial statements and all. The committee as a whole, but we are going to study audit committee in detail later. So that time also you will see many of these points will be repeated there also. Okay. The committee as a whole must have competence relevant to the sector. That audit committee as a whole, they should be competent enough to work for that sector. Okay, for example, you are auditing oil industry. That committee should have the knowledge of the oil industry before you audit. And everyone, not just one. The director should explain in the annual report their responsibility. See, the preparation of annual reports and account is the responsibility of the director, not the auditor. Auditor will just come and check. Also, what are the company's risk? Principal risk, main risk, and what risks are emerging? The board should carry out a robust assessment of this. Board should assess this risk so that auditors can come and check. But the assessing of the risk is the board's, because no one knows about the company's risk better than the board. Okay, board should confirm in the annual report that they have completed this assessment. Okay, they have described the principal risk, what procedures they have identified to what they have put in the place to identify emerging risk, and how they have managed this risk. The board has managed the risk needs to be explained. The board should monitor the company's risk management. Okay, it is the board that initially monitors how the company is managing risk, what is the company's internal control system. At least annually they have to monitor, if not every day, if not very frequently. And also they have to carry a review of the effectiveness and report on that, right? They have to review whether it is working or not, internal control is effective or not, and they have to report also. Just reviewing is not enough, report also whether it is effective or not in the annual report. Okay, and this monitoring and review should cover all material controls like financial control, operational control, compliance control. All these three are very important, they're material. The board should state whether it considers it appropriate to adopt going concern. Okay, the board should state whether they consider that it is appropriate to adopt going concern basis when you're preparing a financial statements. It is the board's responsibility. The board should state that. And also they have to identify, are there any material uncertainties that arises that makes the company difficult to continue for the next 12 months. The board should explain in the annual report how it has assessed the prospect of the company, that is the future for the company, and for what period it has done so, and why they consider that period to be appropriate. So you see, so much of responsibilities are on the board if you see here. But when we come to audit committee, then we'll see the responsibilities of the audit. Because corporate governance, complying with it is the job of the board, not the auditor. Board should state whether it has reasonable expectation that company will be able to continue in operation. They should state, can they reasonably expect that company will operate? Are they able to meet their liabilities? For example, the company is facing losses now. Currently for 3 years it has been facing losses. In that condition, are they able to meet their liabilities in the short term or not? Can they become a profitable company again or not? Do they expect it in the future? Reasonable expectation is there or not, the board should state that. And these are some main roles and responsibilities of audit committee. Okay, they monitor the integrity of financial statements. whether the financial statement is giving the true picture or not. They provide advice on whether annual reports are fair, balanced, and understandable. They review the internal financial controls and risk management system. They monitor and review the effectiveness of internal audit function. Not just external auditor, even the internal auditors function are reviewed by whom? Audit committee. But sometimes some company might not have internal auditor. That time audit committee should see annually, they have to check whether they need one or not. Maybe company has grown, right, outgrown its size, that they need an internal auditor. The risk might be changing, things might be happening. So you need to check these things. When you have to appoint or remove external auditor, it is the audit committee who makes that recommendation and how their remuneration needs to be fixed. Okay, the external auditor's independence are checked by audit committee and whether the audit process is effective or not. Audit committee is like that parent, you can say, which can see, like how parent, we are always accountable to them for whatever actions we take. At the end we have to answer them. Audit committee is also same like that. They have a watch over us, the external auditor as well as internal auditor. They need to report to them. They will be checked by the audit committee. Understand? Also, develop and implement policy on the engagement of external auditor to supply non-audit services. Which type of non-audit services can external auditor provide? This policies will be implemented and developed by audit committee. Audit committee will decide that you can supply this or you cannot supply this. Okay, because non-audit services, okay, auditors are giving non-audit services. In some jurisdictions, it's restricted according to the law. One act is Sarbanes-Oxley Act. The US Sarbanes-Oxley Act, they say external auditor cannot give non-audit services. It's restricted. It's against the rule. But some, you might, when you are coming to the UK, because they follow a principle-based approach, corporate governance is a principle-based approach. So they say, okay, you can supply some, what you can supply, what you cannot supply. Okay, they're not restricting entirely, but there are some that you can, there are some that you cannot. Audit committee will decide. But let's not go into that list. Okay, the list is not given, so we should not go. Then, annual report should describe the work of the audit committee. These are the work. What are the significant issues that they have faced relating to financial statements? Second, how they have made sure that external auditors are independent and the audit process is effective. Third, if there is no internal function, audit function, then you have to explain. Audit committee needs to explain in the annual report why it is so. Okay, and how auditors' independence and objectivity are safeguarded. For example, if the external auditor provides non-audit services, it means it is against their auditor's independence. Auditors are not independent. That's why they're restricting, right? But if they provide non-audit services, how do you make sure that auditors are independent? Audit committee have to write it. These are the works of the audit committee. Remuneration, the last out of the 5, this is the last part. There is a committee also for that which sets remuneration. Okay, in this also you need minimum of 3. Here also it is entirely non-executive directors only. See, there are 4 committees: remuneration, nomination, audit, and risk. Remuneration and audit committee both has entirely 100% non-executive director. There are no executive director. Okay, so minimum of 3 non-executive directors should be established. Second, this committee, okay, the chairman cannot be a part of this committee. They cannot be a chairman of this committee, remuneration committee. But they can only be a member if they were independent on appointment. Third, how the executive director's remuneration will be, what are the policies will be set by the remuneration committee. They will decide. So it is like remuneration committee is the one who sets the remuneration for the executive director, not non-executive director, only executive director. Okay, that means all the chairman, the executive directors, the senior management, their remuneration is set by the remuneration committee. Okay, the committee should review the workforce remuneration. They should review this remuneration also. Then, who sets the entity's remuneration? If executive director's remuneration is set by the remuneration committee, then what about non-executive director's remuneration? It is determined by the board. Board decides it. Okay, when you are setting the remuneration for the non-executive director, make sure the time commitment is there based on the time and also the responsibilities of that non-executive director, particular non-executive director. Okay, and in this remuneration, you should not include share options. You should not include any performance related elements. They should be independent of the company. And remuneration schemes, when you're setting, it should be in such a way that it promotes the long-term shareholdings by executive director. Next, remuneration schemes should include provisions that enable a company to recover or withhold the sum of the share awards. Okay, and when you're putting for the pension, trying to give pension, only basic salary should be pensionable. Whatever the performance related or share options, they are not pensionable, only basic salary. And when you are giving the pension contribution rates, make sure it is aligned with those available to the workforce. Generally, others in the same industry, the employees are getting the similar rate. And when you're giving a notice or a contract period, it should be 1 year or less. But sometimes you can extend that more for longer periods. Especially for the new directors, sometimes you might offer them a longer period. But after that initial period for the new director, period should reduce to 1 year or less. Okay, new director only could be more than 1 year because after that next year he will be an old director. So that time you have to reduce it back to the normal 1 year or less. When determining executive director's remuneration policy, okay, the remuneration arrangement should be transparent, easy to understand, predictable, proportionate, and aligned to culture. Okay, if there's any risk that excessive rewards or excessive remuneration is being paid to executive director, make sure it is identified from the very beginning and it needs to be mitigated. Because a lot of corporate scandals, all those things are why? Because corporate governance is not followed, because excessive remuneration is there, no audit committee is there, no nomination committee is set up. All those 5 points that we just went through are the reasons why corporate governance is playing such a role, so that in the future there are no corporate scandals, there are no failures, there are no bankrupt company does not go in bankrupt. That's why we need all this strong framework. Understanding? And remuneration is one of the main, because if you see all this collapse, big corporate scandals that happen, collapse of the company is because of excessive remuneration are being paid to the executive director, and then they just leave. They take excessive remuneration in their pocket and they leave, letting the company suffer or die. That's why this needs to be controlled, put in, you know, some framework has to be there to guide it, how remuneration should be set, that it should be transparent. That's why we are studying all this. Just my advice is how to learn so much. Don't memorize, read one or twice. Okay, you automatically, it will be there. When we are writing about these things, it will be there. You will know, okay, remuneration, it should be transparent. Remuneration, executive directors remunerations are set by the remuneration committee, non-executive directors are given by the board. This few things, if you know, it is more than enough. Okay, the work of the remuneration committee should be described in the annual report. See, work of all the committees should be there in the annual report, whether it's nomination committee, audit committee, remuneration committee. Okay, now finally we come to the end. Before we move on to audit committee, What is the relevance of corporate governance to external auditors? Link. You should be able to link everything that you study with your audit. Number one, if company complies with the corporate governance best practice, that means the control of that organization is going to be more strong. Okay, if control is going to be more strong, means what? This will reduce the control risk, inherent risk. Both of this risk will reduce. That means the chances that your financial statements will go incorrect or it will be materially misstated will reduce drastically if corporate governance is followed in the company. That means the work of the auditor becomes much easy. Things are fair, things are transparent, they can easily check, everything is disclosed, everything is followed correctly. Things become easy for the auditor because both control risk, inherent risk reduces, which will reduce the audit risk also. That means your financial, if there's a strong control in the company, your financial statements are more likely to be correct if it is prepared under that environment. And in addition, external auditors they are required to report whether companies are complying with the code or not, UK corporate governance code or not. Because in some, okay, in UK, to get a listing, okay, if you want to list your shares on the stock exchange, you have to make sure that external auditors, they have to report whether the company is complying with the UK corporate governance code or not. So it's a requirement. So that for that reason also you have to know corporate governance, all these 5 points. And audit committee of the company must also assess the effectiveness of the quality of the external audit and monitor compliance with ethical standard. Now we are moving on to the audit committee. What are the broad objectives? There are so many objectives of audit committee, but these are the three main objectives. Number one, it increases public confidence and credibility in the financial statement. Second, it helps the directors to meet their financial reporting responsibilities. Third, the position of the external auditor becomes more better. Okay, if audit committee is there, because they know external auditors are answerable to audit committee. Audit committee will anyway look after the independence of external auditor. So having that audit committee gives independence and strengthen the position of external auditor. So these are the three objectives. Now we are moving on to few areas in the audit committee. How audit committees are structured, how they will be remunerated, who will appoint them, what skills do they require, how they will be retired, uh, how are they going to operate. All those things we are going to cover now. Starting with membership. Who could be member of audit committee? How are they appointed and what skills? Okay. Number one, as we already discussed this before, committee should compromise independent non-executive directors only. Minimum three. And all three should be independent non-executive director. Second, out of the three, if it's a smaller company, then two. These things we have already done before, so I can quickly go through this. It's like second time I'm repeating. Three for big companies, two for smaller companies. Out of those three, one should be having financial expertise, and all the three should have experience or knowledge about the sector in which they are operating. If it's a bank, you should know the rules and regulations of the bank. If it's a gas, the energy company, right? One member should have relevant, that means recent, very recent financial experience. That means, for example, if you're an ACCA affiliate or an ACCA member, okay, that means it's good. I mean, out of the three, you are the one who have a financial experience if you're an ACCA member. Okay. Then committee member should be independent of operational management. That means you do not have anything to do with operation side. Okay, you're not operating the company, you're not there in the company, how they operated and all, how they are managed. Then who are appointing the audit committee? The board is going to decide. Appointments to the audit committee should be made by the board. And who is recommending the board? The nomination committee. The nomination committee will check, do they have the skills required to be a part of audit committee? Do they have experience? Do they have the qualifications to meet the corporate governance requirement? If they do, take them. Then appointment should be for a period of up to 3 years. And they can extend by no more than 2 additional 3-year periods. What do you mean 2 additional 3-year periods? That means two times 3 years and 3. That means 9 years. Another 6 years they can add with this 3 years. That means beyond 9 years you cannot be in that audit committee. Up to 3 years you could be appointed in the audit committee. New members should receive induction. If you are a new member, you should have the training, you should receive the induction. And this should be given to all members on a continuing basis. Meetings. How meetings are held in audit committees? There is no limit to how many meetings, but they should hold as many meetings as the roles and responsibilities require. Okay, but it is recommended that no fewer than 3 meetings are held. That means at least 3 meetings should be held. It should be 3 and above, not less than 3. No one other than the audit committee chair and the members is entitled to be present at the meeting of audit. See, when there's a meeting of audit committee going on, okay, the one who is chairing the audit committee and the members of the audit committee, oldie has to be there. No one other than them should be there present in that meeting. Okay, it is the audit committee who will decide whether non-members who are not a member of the audit committee will be there or not, like finance director, head of the internal or external audit partner should attend a particular meeting. Okay, next, audit committee, they have to meet internal and external auditor without the managers there present. Okay, at least annually they have to meet so that they can discuss if there is any issue regarding the audit. Okay, whatever the formal committee meetings are there, in addition to that, audit committee should keep in touch with those people who are involved in corporate governance, company's governance, the key people, on a continuing basis. Now, resources. What are the resources of audit committee? They should be provided with sufficient resources. See, audit committee in the company, the board, they have to give all the resources that audit committee needs to undertake its duties. Okay, the company secretary should ensure the company secretary is the one who will make sure that all this information is given to the audit committee. Then funds also has to be given to them, so that if they want to take any independent legal decision, legal advice from the lawyers or anything, fund has to be given to the audit committee. Remuneration, very important area. How remuneration is set for audit committee? When you are remunerating, when you are paying the auditors, the audit committee, okay, the level of the fees paid to the other members of the board. The remuneration should take into account the level of fees that are paid to the other members of the board. Okay, the chair will be paid, obviously the chair of the audit committee will be paid more than the other members because the chair has additional responsibilities. Relationship with the board. The audit committee should report to the board on how it has discharged its responsibilities. They have to have a communication with the board. They cannot be isolated. And what if there's a disagreement between the audit committee and the board? Make sure enough time is given to resolve that issue. And if issue is not resolved or things are going bad, audit committee has the right to report that to the shareholder, the issue. And the audit committee, they should not just rely on the external auditor, so that when external auditor comes and raise any issue, then they will take an action. No, they themselves also have to take their own initiative. The audit committee. Annual report. Audit committee should do this. Any significant financial reporting issues are there, needs to be reviewed and reported by the audit committee. And also, obviously, they have to make some judgments. Okay. Second, consider the appropriateness. Why certain accounting policies are chosen, estimates are done, judgments are, we all know when you are making financial statements, not everything is objective. Not everything you cannot find facts. Sometimes you have to use your own judgment. Some estimates, accounting policy choices are there. So you have to see why it is appropriate. Audit committee have to report this. Then you have to review the annual report also and advise the board whether they are fair, understandable and balanced. Internal control and risk management. It is the board's responsibility. Ultimate responsibility is with the board. Okay, for risk management and internal control. But they can delegate some of this function to the audit committee also. Like audit committee can review the system. okay, to identify, assess, manage, and monitor financial risk. Second, they can receive reports from the management. Okay, it is the management who is going to report whether the system is effective or not. But after receiving that report from the board, the audit committee, they can test. Okay, test whether it's effective or not. Review and recommend disclosures to be included in the annual report. In relation to internal control and risk management, if there is anything that needs to be disclosed, audit committee can recommend that. Now we are going to internal and external audit process. Okay, for internal audit process, number one, first audit committee should regularly review whether they need an internal audit or not. And if they need, then they have to review and approve the internal audit plan. Okay, and that plan should be aligned with the key risk of the business. If you see, we are always talking about risk because audit and risk go hand in hand. Okay, if there is no risk, audit becomes very easy. But unfortunately, no company exists without risk, right? That's why auditors' work becomes a little difficult also to analyze those risks. Third, committee should ensure that function has unrestricted scope. That means whatever the resources internal auditors need, whatever the information internal auditors need to perform their work, audit committee has to make sure it's given to the internal auditor so that they also can perform their work at a professional standard. External auditors, yes, definitely they will be at a professional standard, but internal auditor, you have to make sure, because since they are also the employee of the company. Okay, it is the audit committee who decides who is going to be appointed, who is going to be terminated. Okay, and who is going to be the head of the internal audit. Then internal audit function should have a reporting line. That means internal auditor, if they have to report to anyone, there should be one reporting line that is independent of the executive. That means out of the executive director, executive like managers and all, so that you can make sure that internal auditor are also independent. They monitor and review the effectiveness of internal audit functions work, the audit committee. How do they do that? They will check whether they have the quality, the internal auditor. They will check whether the internal auditor have the experience. They will check whether the expertise of the functions are appropriate for the business or not. Next, meeting with the head of internal audit. Okay, you have to meet also sometimes with the head of the internal audit without the managers present there. Third, you receive a report on the results of the internal auditor's work. Then, audit committee may consider an independent third party review. Sometimes what do? They hire someone else. They take another independent third party to review the work of the internal audit. Now we are moving on to external audit process. Okay. For FTSE 350 company, they should put audit. They should put the audit out to tender at least once every 10 years. Okay, that means they're putting it on tender 10 years. So that audit committee, okay, so enable the audit committee to compare the quality and the effectiveness of the services. Second, the audit committee have primary responsibility for the appointment of auditor. Who appoints the auditor? Audit committee. Okay, so they will see the tendering process and selection procedure. Also, an annual assessment should be made. For example, what are the qualifications? What are the experiences? What is the independence of the external auditor? They have to do this annually. They have to assess. It's not just for once they assess whether the external audit is independent or not. Annually, they have to do it. If by any chance external auditor resigns, audit committee should investigate why they have resigned, and also the remuneration and what is the term of the engagement for the external auditor is decided by the audit committee. Audit committee should monitor the compliance. Are they complying with ethical standards regarding level of fee? Are they paying too high, too low? or what are the former employees of the audit firm? Sorry, former employees of the audit firm who now work for the company. Partner rotation and non-audit services. These are the four areas where ethical standards, you might not sometimes comply with ethical standards. You might become unethical. So audit committee makes sure that you are complying with it, right? Audit committee should set and apply a formal policy specifying the types of non-audit services. Okay, there should be a formal policy which says that this type of audit services are approved, this type of non-audit services are not approved. Then, at the start of the audit, make sure auditors have appropriate plans before starting the audit also. And audit committee have to check the plan. They have to check whether the plan materiality level and resources are consistent with the scope of the work to be performed. And audit committee should discuss with the external auditor any matters that could affect the audit quality. You see, audit committee should review and monitor the management's responsiveness to the external auditor's finding. That means how managers are responding to the external auditor's finding. For example, external auditor might say that you are not complying or you are not following a particular IFRS, or so audit committee will see, they will review, they will monitor whether managers are listening to the external auditor's recommendations or they are not. And also if they are getting any written representation by the management, external audit committee will see before they sign it. Audit committee should assess the effectiveness of external audit process. How do they check? How they have checked for internal audit, same way they will do for external audit also, whether it's effective or not. How do they do that? They ask the auditor. They ask the auditor directly, explain the risk that can affect the audit quality. Second way, whether the auditor has met the agreed audit plan or not. Third, they obtain feedback from the key people like finance director, how audit has been conducted. And they can review the content of the management letter and whether recommendations given by the external auditor has been acted by the management or not. If these things are there, if they have acted, that means it's effective, otherwise it's ineffective. Now, communication with the shareholder. Audit committee chair, okay, the chairman of the audit committee should be present at the annual general AGM stands for annual general meeting. They should be there at the annual general meeting to answer questions. Okay, and this should be there in the annual report, like summary of the role of the audit committee. Obviously, you cannot write detail, okay, 10-12 pages detail you cannot write, but summary, yes. The names and the qualifications of all the members of the audit committee. What are their qualifications and also their names of all the audit committee members should be there. During that period, needs to be included. The number of audit committee meetings. The significant issues that the committee considered regarding financial statements and how those issues has been addressed. Writing issue is not enough. How issues has been addressed also you need to write. How effective the external audit process was. Like how you have assessed whether they're effective or not. Okay. And the approach that you have taken, the audit committee have taken to appoint or reappoint external auditor needs to be written. Now we are moving towards benefits and drawbacks of audit committee. Drawbacks are 4, but benefits are quite a lot. You don't have to memorize everything, but just knowing few benefits will help you to answer your questions. They will not ask 10, 10-15 benefits. Maybe knowing 3-4 is enough. Number 1, improve credibility. Your financial statements credibility improves. Okay, because it is checked by, it is signed by the external auditor who are independent. Next, the quality of the management accounting will be improved. Okay, because audit committee are in a better position to criticize internal functions. If internally company is doing something wrong, audit committee is in a better position to criticize it. Third, control environment becomes more threatened because audit committee is there to look after the independence of external auditor, also the internal auditor. Then, communication between the director, external auditor and management may be improved. There should be someone who holds them accountable. Director, external auditor and the management. Then, if there is any conflict between the management and the external auditor or the internal auditor, it is reduced. Audit committee will come and try to avoid or reduce. The skills and the knowledge and the experience of the audit committee gives invaluable resources for a business, right? They are very they have high skills, knowledge and experience which no one in the company does. When you come to go for a bank loan, it becomes easier also when you're having an audit committee, because it gives an idea that you are following, you are perceived to have a good corporate governance. Okay, it makes it less risky also. And in terms of listing requirements, as I told you, in UK to list, you need to comply with UK corporate governance code. It's a requirement. So in that way also, listing requirement also, it helps having an audit committee. Now, what are the drawbacks? Drawbacks are four. Number one, you need to recruit the right non-executive director. As I told you, audit committee needs to have all non-executive director. So hiring them becomes difficult, because how do you know who is the right non-executive director? It's difficult. Having relevant skills, the experience, right? Second, a fear that their purpose is to police executive management. Their purpose. Okay. Third, they may be overburdened with detail. Non-executive directors sometimes might be given so much of detail that they are overburdened. Fourth, non-executive directors are normally remunerated. Okay, so because of this, their fees are quite expensive. So this increases the cost for the company also. Having them, it means having audit committee itself is expensive, because audit committee itself is teamed by whom? Non-executive director, and it's just not one; it's many. Now, let us summarize everything what we have discussed in this lecture. We started with the need for assurance services. Number one is because it gives it makes the financial statement or the services more relevant, more reliable to trust. You can depend on it. Okay. Second, regulation of the profession. Why you need to regulate? Because of this high corporate failures and all, which erodes the trust in the economy. Okay, from the assurance market. So when you regulate the profession, people can again trust the profession. Okay, the auditing profession. What are the main bodies? ISAs and Code of Ethics. The International Standard of Auditing and Code of Ethics. Then we went through corporate governance. Under corporate governance, okay, we went through these areas. The broad leadership and company purpose. The 5 points, right? Division of responsibilities. The chairman and the CEO should not be the same person. Composition, succession, and evaluation. That 50% of the board should be non-executive director other than the chair. Okay. Audit, risk, and internal control. That risk management and internal control, reviewing the effectiveness, is the responsibility of the board. Remuneration. You should have a remuneration committee. They should look after the remuneration of the executive director. Non-executive directors' remuneration are checked by the board. Right? The remuneration should be transparent, should be open, understandable, predictable. Then finally, we went through audit committee. Right? Their sole objective is to increase the public confidence in the credibility and the objectivity of financial information. And we went through this, how they what should be their membership. At least 3 members. One should be with financial experience. All are non-executive director. Appointment. It is decided by the nomination committee. Recommends to the board, and the board is the one who gives the audit committee, appoint audit committee. And the skills. They should have the skill of the industry. Meetings. No less than 3 meetings. Okay, they should meet regularly. Sometimes with the internal and external auditor without the presence of management. Resources should be given to them by the company secretary. Remuneration, they should be remunerated, right? Make sure that the level of fees is in line with the other members. Relationship with the board, they should communicate often with the board. Annual reports, what in the annual report should be described, the summary of the audit committee's work, how they have checked the effectiveness of the external auditor. Internal control and risk management. Some of it can be delegated to audit committees, but the ultimate responsibility lies with the management. Internal and external audit process. They will check the effectiveness, they will check whether internal audit is needed. If it's needed, they will check the work, right? Communication with shareholders. They communicate. If issues cannot be resolved with the management, they can communicate with the shareholder. And then we went through the benefits and the drawbacks of the audit committee. One benefit is public confidence is improved, strengthen the position of external auditor, taking finance becomes easier, listing requirements is met, right? Drawbacks is it's expensive to hire non-executive director, hiring the right non-executive director is difficult. And thank you for watching this. And see you in the lecture 2. Lecture 2, we are going to discuss money laundering. Okay. From there onwards, things will be a little more technical. Okay. So don't forget to subscribe to my channel. If you're the first time uh, viewing my channel, don't forget to subscribe and recommend this to your friends. See you.